welcome two guests here who've been on previous town halls. Ron Quaranta, who's been our partner for many, many years. He's the CEO and chairman of the Wall Street Blockchain Alliance. And we're going to be talking about a symposium we just held with Ron. And we have Amy Beers, who's the Senior Director of Assurance and Advisory Information. And she oversees all things that are going on related to digital assets at the AICPA. So great to have you both.
Thank
Great
you.
to be here, Eric. Good to see you. Always great working with you and Amy. Mark, always a privilege.
Good to see you.
So, Mark, we've been holding, Mark Koziel, this blockchain symposium now for 8 years.
Hard to believe.
It
Yeah.
is. But you know what? We're gonna dig into digital assets. But I just want to step back and reflect on how we were viewing blockchain back in 2018. There's some similarities to some of the talk that's going around about Gen AI right now. You and I were sitting at conferences, and I remember sitting with a bunch of auditors, and some said, you know what, this is 2018. I'm glad that I'm retiring 2 years because blockchain is going to put the audit profession out of business. That hasn't happened. We're going to talk about the state of digital assets and blockchain, a lot of excitement. But it's interesting. What we do with these symposiums is try to demystify, what's going on. That's what we did in the early stages. But just maybe some of your reflections on kind of this journey.
I mean, and for so many years, I've heard of all these things. I don't know what we did to society to have society say that we're going to be put out of business every time there's a new technology, but blockchain was right in there, right? So this goes all the way back to the advent of spreadsheets. I don't even want to say Excel, VisiCalc. I'll date myself on that, well before Excel. But blockchain, we were having those conversations, Ron, right? When we first met in 2017, 18, when blockchain was coming around, that it was going to replace what the auditor does. And yet here we are, and we have the Genius Act. So I'm excited for this update. I think it's really great for our members to get an update on what you're both hearing.
Thanks, Mark. So this is, we're posting some of this to social media. A lot of great discussions over this symposium. So what we're going to do is give you some of the highlights. And we're going to start things off, Ron.
Yep.
And you do a great job. We call this Crypto Year in Review. It's actually a 5-year look back. So one thing that just astounds me is that 65 million Americans own crypto.
Eric, it's so amazing when we do the research and we look at some of the data and realize a growing percentage of Americans use crypto in some way, shape, or form. Be it firms that have members and employees that want to be paid in crypto, be it through investments. And we're beginning to see it percolate through growing portions of the economy. Wall Street, hence my organization, really looks at how do banks treat clients and offer services, how do brokerage firms, how do retirement accounts. Retirement accounts today are spending an inordinate amount of time trying to understand how crypto can be part of the landscape for them. So again, 65 million people owning crypto. It's been a 180 since our last symposium, Eric. I think we're at a $4 trillion market cap, give or take. Bitcoin's price, we were joking about it at the symposium, it was about 122 or something. 126 yesterday, back down. So there's a certain amount of volatility.
And a big comeback from, we all reflect on when we had it was December of 2022, FTX, the collapse there, the fraud. And then you had a little bit of the crypto winter. And it went down to like 17,000, under 20,000.
Correct.
But look at this. It's going mainstream.
Yeah, and that's a reflection of a couple of important things that have happened stateside. One is certainly a lot's happened since January when, from a regulatory perspective, some things have been throttled back to understand what this means for the ecosystem. And certainly this growing interest. And one of the things we've often spoken about is the accounting profession being tied to understanding 861 million crypto users worldwide, crypto trading hundreds of billions of dollars every single day. So it really is an important part of how the ecosystem grows, how the economy grows, and inarguably how the accounting profession participates in that.
Well, clearly on this town hall, we've got roughly 13,000 people. We have a lot of people that are not involved in crypto or digital assets. But the two big buzzwords at the symposium really were around stable coins and this ETF movement.
Yeah, absolutely. And stablecoins are one of the premier products being brought forward in the marketplace, really, which are crypto tokens that are tied to underlying value, like U.S. Treasuries, for example, or the dollar, for example. And that means money for some of these large Wall Street giants. Goldman Sachs, PNY Mellon, BlackRock, Fidelity, all of these are offering now services. And it won't just be to high net worth individuals. It will be to their mass consumer base. We're also talking about the tokenization, Bitcoin ETFs, and I want to raise one thing that Lisa raised a bit earlier around the tax implications for staking. I think it was today where a particular exchange traded product will make staking available, staking rewards available to their ETP holders. So again, the argument we've always put forward, aside from me arguing with my earpiece.
You don't need it, Ron. We're here in the studio. You can take it out.
Is this idea that the accounting professional will become ever more important in how do we value this stuff? How do we report on this stuff? The other interesting aspect, if I could real quickly, Eric, is real-world asset tokenization. By mid-2025, we're looking at $27 billion. That's growing exponentially over time. So you will begin to see tokenization across not just Wall Street assets, but across real estate, across luxury items. There was a news item recently that luxury items being written to a blockchain and tokenized for sale, and it realizes a lot of efficiencies and it realizes a lot of operational minimization of expenses. So this institutional adoption is driving a lot of the conversation.
Well, and we've got, and the regulatory landscape has changed. We've talked about this with Mark Peterson, but it's changed dramatically.
It has. It has. And when we look at the formation of the Digital Asset Working Group, you know, what we've often said, Eric, is it is a non-partisan conversation when we talk about crypto. And there's a lot of stuff in the news about donations and the election. The important part is what's being developed. When we look at the pro-crypto executive orders, the reversal of SAB 121, which in my mind really made it difficult for quote-unquote legitimate or qualified custodians to participate in this space. Even things like the SEC Crypto Task Force. It is astounding how deeply involved the SEC and other regulators were in trying to evolve the industry, protect investors, address their mandate, but allow innovation to thrive in the ecosystem. And then finally, some of the regulatory certainty. We've got a lot to do, and I know, Amy, you're going to be touching on Genius. We still have a market structure bill that's a bit up in the air. But really, this is the maturation of a market. Eric, you and I have been talking about since 2017.
Yeah. Well, yes, and one thing I want to note, we've had a partnership with the Wall Street Blockchain Alliance for the past 9 years. But Amy, this, I mean, everybody, we had all kinds of firms in attendance here. Also technology companies, everyone's very impressed with the AICPA's leadership around, you know, how you do the accounting and the treatment of these digital assets.
Right, and so we've been involved in this since the beginning of, you know, starting with the Blockchain Symposium, and from that initial symposium, we got a lot of feedback and a lot of questions from our members about how do I account for this stuff, you know, what does it mean in my financial statement, audits, even some tax. So we kicked off and formed this Digital Asset Working Group in response to those questions. And so we have formed this group of our members. They represent experts across the firms and lots of different size firms, Big Four down to some of the smaller firms who are really dealing on the ground with some of these issues. And we have developed this guidance, and it's the Digital Asset Practice Aid. And it is a live document. It's a member-only benefit for our members to go to our website, download a copy of it. We keep it updated. So we have done a number of updates over the years. This year we did 2 updates. And the practice aid is sectioned off between accounting topics and audit topics. From the accounting standpoint, we've got 8 chapters covering accounting of different topics, 28 different Q&As. And this year in January, we updated the document for the new FASB ASU, the accounting standards update that was related to crypto and tangible assets. And with that, we updated the entire accounting section for this new FASB ASU, as well as adding some new Q&As related to which assets, which digital assets would be in scope of that FASB ASU. Now on the auditing side, similarly, we also have 7 chapters dealing with different auditing topics. We start with client acceptance. Client acceptance is really the most important aspect of whether you get into this space or not, right? What are some of the things that you need to understand? It's really a unique space. You need to have some special skills and knowledge in dealing with digital assets and dealing with the technology. And so does management of your client. So, what is their overall strategy and why are they in the digital asset space? This past month, we actually updated the practice aid again for the auditing side. We added Chapter 7, which is on crypto lending and borrowing. And we talked about this in the symposium, given some of the stats, Ron, that you just brought up in terms of the growth and the value of these crypto assets. There are holders out there who have these high value assets. And rather than selling them and taking the capital gains, they might want to lend and take the interest or use them as collateral for borrowing. And so how do you account for that? And then how are these transactions being handled by the auditor? And we provide a table of example procedures that auditors should consider as they go through this. So next, I also want to talk about our attestation subgroup. And this is where the Genius Act comes in. Attestation is an assurance engagement that covers information that's outside of the traditional financial statement audit. And auditors use the AICPA attestation standards for these engagements rather than the audit standards. And so the stablecoin information is actually outside of that process. And so this image, I've presented it a couple of times, but this image represents a trusted ecosystem for stablecoins, what we think as a trusted ecosystem, with the roof being laws and regulations that oversee the whole ecosystem. And we now have the Genius Act. And that was really groundbreaking, right? I mean, the first federal law covering crypto assets. And so that not only requires that stablecoin issuers do have one-to-one backing on these coins, it also has a reporting requirement on a monthly basis, as well as an attestation service that needs to get provided by a CPA on a monthly basis for these reports. And so looking at the foundation, you really need a good framework for reporting this information. And so we have issued the 2025 criteria for stablecoin reporting, provides a benchmark for reporting under this act, and it is available on our website. And now the pillars. Those are where the CPA come in, right? We support this whole ecosystem by providing assurance services over these reports that are going out to the public and providing that transparency and the public interest. And so we are working on technical Q&As for practitioners who perform engagements in this area. So on the next slide.
And just we've got a number of questions coming in, but I'm just going to take a question. I have a question here on stablecoin. I mean, this is a huge emerging field. There's how many? There's 1,000 stablecoins.
I think there are 1,000.
Right now, there's too many.
Yeah.
There's too many. But when you talk to the technology leaders, you talk to the banks, you talk to the financial professionals, this is going to be a different wiring of how some of finance transactions are carried out.
Right, and if we go back to the original reason for stablecoins, it was to remove the volatility of crypto, and then it became rapidly the new rails for things like payments potentially, or how Wall Street settles transactions, for example. And take it one step further, Eric, and you and I talked about this at the symposium, when you have companies that are going to be issuing their own stablecoins, how are they going to do that? What's the value proposition for that?
Right, and so it's a lot of this will be a niche category. And I think we probably are going to be evolving this. We're thinking about this, having a digital assets, crypto conference, because there's just so much depth. The other question that's been coming in is just a little bit of a briefer on what is tokenization.
Right, and that's probably its own session.
That's its own session, right.
Tokenization is the ability to take some asset and have it legally represented within a token that's based on a blockchain network. Right. So we've talked about tokenization. Essentially, stablecoins are a tokenization of an underlying asset. We've looked at real-world asset tokenization. This conversation is about real estate and the luxury items I mentioned. And Ron might be able to tokenize his house one day and sell pieces of it. Again, some of the future thinking of it, but that's the fundamental premise of a token.
Right, and it's also even like with maybe doing things that makes titling simpler. So there's all kinds of things that are occurring here.
That's right.
Amy, back to you. There's questions on getting access to the Practice aid.
Yes, and so the slides have direct links directly
Okay.
to the practice aid, directly to our stablecoin resource center. On the resource center, this is a direct link to our summary that we prepared on the Genius Act. It's a handy 2-page document you can download right on our website, giving some of the highlights of the Genius Act. And lastly, I wanted to just talk about the tax side. Lisa had mentioned some of the things that are happening in the tax area related to the IRS guidance. And quite frankly, there's not enough guidance out there. And so our tax working group is developing a practice aid similar to our accounting and auditing practice aid. And they're going to be dealing with, some basic concepts that you can, tax practitioners can go to their clients with specific questions about their involvement with digital assets. We'll summarize some of the IRS guidance and provide some best practices for some of the reconciliations that may be needed between those 1099 DAs and the Form 8949. So this practice aid will be released right before the tax conference that's coming up next month.
Well, Amy, thank you. Just great leadership here on advancing all of this for the AICPA and the membership. And Ron, thanks for your partnership.